Hi guys, welcome to Friday. Today is another video. We talk about the stock and Japan. So how does Japan and we'll talk about the PMI index. How does the Japan and manufacturing index going to be really good, but how does it affect the stock market? So first of all, welcome to our to 2018. So I think majority of the stock indices has been doing really good in the first week. Basically, we have to look at one index, is the Japanese yen. If it's getting weaker or it stays the same level, it's really the best case for investor to borrow yen and then invest in stocks or any high yield currencies such as Canadian dollars or Australian dollars, especially Australian dollars right now. How does it affect the stock index from this news? Because this news is really good because the PMI index for Japan has been the highest since last 4 years. That is basically indicating that Japan manufacturing and also producing, and then maybe the GDP will be doing the best since ever since the past in the past 4 years. Basically, it's because the Japanese yen, US dollar to Japanese yen, whenever it stays in between 110 to 120 is the optimal level, optimal range for Japan to operate and to for the export, is the best case scenario. So they will do the best. The government will do the government and Abe will do all the things they can to make the Japanese yen stay at this level. So let me give you an example. So for 10 years ago, Japan has had raised the interest rate for 55 basis points. That is the really bold action that they haven't been doing that for the last 2 decades, right? So that is when we look at is 2007, right? So when we look at the Japanese yen to US dollar to Japanese yen, the level is was at this level. See, 2006 and 7. This is 110 to 120 level, right? This is the optimal level. So you say that, oh, for an export country like Japan, it should be as weak as possible, the currency, which is not the case, because if it hits 140, then guess what? Who will be angry? US and the Europe, right? They will say that, oh, Japanese yen is too cheap and the export is really beneficial for Japan. What about me? No one is buying product from Europe and US, right? So I will make you go stronger. Just like in the 80s, remember there's an action taken from US and France, I believe, making the Japanese yen went strong, by double, instantly. So making the Japanese economy crash until now, right? So staying at this level is optimal. The second reason why getting 2 weeks is not good, because in the Japanese institution and companies within Japan, if the currency getting 2 weak, it will kind of having an accounting loss because of the FX loss that is created. Basically, only because the yen is too weak, right? That's not too good. So staying in 110 and 120 is the optimal level. So right now, they will try their best to stay at this level, and in fact, it's right now staying at this level, right? So let us look at the NIGH index, NIGH 225. It is the highest since 1990s. Oh, it's really good. It was in the 24,000 level. So should we invest in the Japan economy? I guess you can. Technically, there's the bottom head and reverse head and shoulder, and the target is like that. It's from this the height 15,000 to this 19,000 around. Is the target should be 24 around. So still a bit room left with, but in terms of economy, is pretty good. But as long as it doesn't break below the 21,000 level, is fine. So in terms of globally, because the Japanese yen is really at the optimal level, so people will borrow yen, and that's why the stock market in Taiwan, Hong Kong, especially in China, Malaysia is really good, and US is doing really good. So I know it's really boring, right? Because I asked you to buy Nasdaq and S&P 500 index and the stock. Again, I talk about stocks of Dow and Amazon, Google. Yes, still keep it, because right now It's boring, right? But it's now 7,000 points for the Nasdaq index. So again, I would say that Q1 is pretty safe until middle or end of February, because there are few things that are happening. I talk about in the money video. I talk about that there are few things that will be happening in March. For example, the first FOMC meeting hosted by the new chairman, Fed Chairman Powell, and then the Brexit process, the second phase, and also there's a big meeting happening in China, and also there's kicking off the I remember it's the Italian president, the government. Okay, so they have many things going on will be happening in March. So maybe there's some kind of adjustment in February, but that's a maybe. If that's not happening, we still have to invest, right? Right now, I can see no bad signals happening in both fundamental analysis or in the technical analysis. So you should be buying. I guess first of all, I think you can consider the Japanese stock index, but you have to be really considering in Nasdaq is pretty good, and S&P 500. And the last one I talk about in the Monday market is the Malaysian stock market. See, it boomed right up. See, once the first week of 2018, boom, I talk about 1765 level. This is not BS, right? Because you see, there's slightly pausing at this level, and then boom, one candlestick broken any resistance level, and now the trend has happened. I talk about the double top will not happen. Don't overrate the double top, right? If you don't have the knowledge, or you don't have the skill set to use any patterns, wave theory and stuff, you will always say double top, double bottom, right? That's really beginning. That's noob, right? That's newbie things, okay? So I talk about double top is not a bottom. It will challenge historic high, and it will challenge historic high. Now, 1803 is the historic high for the Malaysia index. So that is basically not historic high, I mean the year high. So historic high is 1900. So I guess in terms of you buy ETFs or any stocks, you can look at my money video again. But that basically my update. At least January is fine. If you it can make you invest in anything, but you have been investing in anything I mentioned, do not sell it right now. So that's the basic update for the last day of the first week of 2018. So remember to subscribe and like my Facebook page, and give me likes, thumbs up, and also share this video to your friends. If you think that what I'm talking about is factual, it's not about emotional, it's not about BS, it's not about traditional wisdom without tested. That's basically, I really hate these comments or analysis happening in Bloomberg or anything in TV or YouTube. People just say, oh, traditionally January you should invest, February you should exit, sell it in May, stuff like that. You have to test it, right? So hopefully you believe in this movement also. So investing easy. I will see you next time on Monday. I'll see you next time. Goodbye.